So we're seeing the crypto markets go into a little bit of a risk-off environment, and you are witnessing the start of a pullback. The question is, will the pullback be sustained? How deep will we go? How quick will it happen? Why is it happening? And then we're also going to discuss why you most likely still will see an altcoin season. So smash the like button, hit the bell notification, and subscribe to the channel. We'll get straight into the show content over here. There's a poll where you can also express your own thoughts and opinions. If you look at the comment section, you can let me know, will there be an altcoin season, one like we saw back in 2017 or even in 2021? I've already seen in the comments a lot of you trying to express your thoughts and your interests on that, but go through to the poll section, vote over there, yes or no. I'd love to know your thoughts as well, to see where the community's mindset is at. So some days are up and some days are down. Today's obviously a bit of a down day. You can see even on the hourly, a lot of the coins taking double-digit dumps over there. Rune down 14% on the week, and most of that drop has been in the last hour or so. So we'll have a look at all of these coins. I'll also showcase a bunch of coins that are actually coming into key support, which if the market does bounce, will be a good opportunity, right? Well, at least getting it at that range low support will be a good opportunity. We'll talk about where the Bitcoin is ranging or trending and what you should be looking for next. So let's go straight into the content. We spoke about kind of leading into this month, the significance and the importance of the month of January, where you would experience a lot of chop. And that's predominantly due to the major high impact events that were surrounded around the month of January. We had, of course, the Trump inauguration. We have FOMC things coming out. We have Japan as well, which is coming up tomorrow. And that is the interest rate decision, which is forecasted to be raised, right? So the highest interest rate for Japan in 17 years. Now, of course, the scare around this is what happened all the way back over here. If we go into the Japanese chart over here, in August, when they raised for the first time, that led to a massive drop, right? And this is because of what they call the cash and carry trade unwinding. Simply put, what that means is the Japanese have been able to borrow for almost zero interest for a very, 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 very long time. And then they're using that very, very low interest rate and free cash that they're pretty much getting to buy up other stock markets. So this has global implications. This is why it drives so much fear around the market. And I guess a lot of people are just kind of trying to sit on the sidelines as they wait for this Japanese interest rate hike decision to come out tomorrow and to see how the market reacts. And then once that volatility is played out, expect that it should be business as usual. So we'll also talk about in today's show why you still most likely will see an altcoin season and how things really haven't deviated too much away from what we've seen historically, right? Even though it might feel that way. So if you look at this chart over here, at the time when the panic did ensue, we actually just pulled out this chart on a monthly scale. This is Japan 225 index, and we outlined the very, very key and significant support level on the weekly where we were targeting price to come down into, and lo and behold, we got the exact wick into that level. Massive bounce over there. And then we spoke about soon after that, you should get some sort of a reversion back in to capture some of this liquidity, which is at the 50% level of this entire wick. And you can see you narrowly missed it. Maybe you went down about 47%, missed it by about 3%. Close enough is close enough, in my opinion. And you started to get the bounce up, right? So I think still very, very unlikely that you're going to take out that low that occurred in August. What does this mean for Bitcoin and how does it correlate? Well, when you had this significant drop, of course, it affected the US stock markets as well. And we're also going to have a look at that and see if there is any sort of a warning sign over there. But stock markets dropped. Bitcoin went down to $49,000 in this environment. Of course, Bitcoin is now trading at about double that price. So I guess since Bitcoin came from 74 to 49, if you did play out some sort of a major correction like that, probably the most significant areas of support for Bitcoin are going to be between $85,000 and $90,000. We'll look at the Bitcoin chart in a moment on both the weekly, the daily, and the 4-hour time frame so that you can know what to expect next, right? If we do look at the stock market over here, well, this is looking fine, right? Because you've had a break of structure and Bitcoin has most similarly been doing what the S&P 500 futures has, which has broken the down sloping trend line. It broke above the yellow box, which simply means it created its first higher high, and therefore any pullbacks that come from this point onwards would therefore be a higher low, right? Which most people would be looking to buy that high low. So probably something like that. You might, if you're lucky, get a bump and run scenario into that trend line over there, presenting a second opportunity. If the stock market does do that, of course, expect that Bitcoin would also simultaneously drop. Now, if we look at both the Japanese market as well as the US stock market. We can look at that over here on 𝗲𝗬𝗕𝗬𝗕, where you can actually trade these commodities, forex pairs, crypto assets, as well as various different stocks. If you look over here, you can see the MACD on the daily is actually still freshly on its way towards the upside. If you look at the MACD as well on the stock market, well, this one already crossed towards the upside above the zero line and has been trending up for a couple of days, and the momentum is still there, right? So high highs and high lows is still the name of the game, and therefore I don't necessarily think that we have the same sort of warning signs that we previously had on the Japanese stock market over there. If you look at the DXY as well, this is pretty significant that if you focus on this trend line, I'll make it nice and big. You have officially broken that down, right? This long, or at least for this massive rally that we've had ever since September, this has been, a multi-month rallying up for exactly over there 109 days, right? So almost, it's about 4 months, right? 4 months of a straight upward rally over here. You've now breached that level, broken below, rejected from the golden pocket, the 0.618 to 65 level over there, which is often commonly a reversal point when you use the Fibonacci levels, and now stop that momentum. So it does create the opportunity that you could actually still set in a lower high. Now that's what you need to be looking for on the DXY. If you set in a lower high on the DXY over here, remember this is one of the 3 criteria that we discussed yesterday, which could lead into continuation of the Bitcoin rally and continuation, of course, of the altcoins, right? At least it should ignite the altcoins, because we've yet to see that, right? And if you do get this drop in the DXY, you can expect probably you're also going to get simultaneously the drop in the Bitcoin dominance and the USDT dominance, which kind of creates that final phase towards the upside. If you do want to trade these crypto stocks, forex pairs, and commodities, remember you can do so on 𝗲𝗬𝗕𝗬𝗕. Use the link in the description below if you want to get that 20% sign-up deposit. So whatever you deposit in, you get 20% extra on top of that. No questions asked, and you can use that to trade with. Or you can opt for the lifetime 25% discount on trading commissions, getting a quarter off the fees, right? Looking at Bitcoin on the weekly time frame over here. Now, this is your rock solid support since the market is feeling rather bearish today. Let's look at the downside targets over here. In a worst case scenario, you'd be looking down towards the range lows, which would come in around, it's currently rising, but you have a trifecta of support, that being a horizontal level, that being the stop and reversal indicator, which was temporarily broken, but now we broke back above it, which is a good sign. If it's angled below, that's an additional support. And you have your 21 exponential moving average on the weekly time frame, which keeps the bull market hopes alive as long as price is above it. And as long as it's angled towards the upside, it is a bull market, and you look to buy every single dip. So a trifecta of support levels coming in at 89,728. And of course, this will be rising. So give or take, between 85 and 90, hence my earlier statement that if the yen cash carry trade did unwind, then that would be the zones where you start to look for major support on Bitcoin. If we look at the daily time frame and the volume, we spoke about this when we're looking for the initial move up, which is exactly what we got. We're looking for this move up over here, and we spoke about this, the importance of getting volume backed behind it, right? And there was that volume. We got the volume was back behind it, and you can see you are holding above these high volume areas, right? This is very important. You want to see continuation of that. If you look at these high volume areas, well, you can see those wicks came in around that $99,000 to $100,000 level, so pretty significant zone. And then slightly below that, you have that 97, and then you go down to about 96. Now, at the end of the day, very similar to the stock market, because Bitcoin does kind of trade similar to what the stock market does. When stock market goes up, Bitcoin does the same thing. The stock market broke structure. It broke the downsloping trend line. Remember, you had a series of lower highs, and over here you were putting in lower lows. So theoretically, that trend has been reversed, right? You've printed your first high low. What does that mean? If you're a trend trader, you'd be looking then to buy the next high low. So even if prices were to come down towards these lower levels, as long as you can very quickly rebound back above the high volume zone over there and put in a high low, that would still be an incredibly healthy zone. again, as mentioned, look at how this all lines up with these key levels around that $90,000 region. You can see all the way down on the bottom over here, I have also marked out 50% of the wick, which is the range low over there, and it lines up over here with that, at least with the range lows, with the 50% of the wick, and would still mean you're putting in a high low. So basically, as long as you're not seeing any candles closing below those daily levels, which would be 92,393, this would therefore be a high low and simultaneously the range low. So double confluence for major support. And there's no guarantee that you're actually going to get such a move. Just saying, if you do get it, probably not the time to panic and exit all of your positions thinking that everything is going to go down to zero, but most likely the place where is a logical area for anyone that's still sitting on cash looking to buy into the market and enter. It changes the entire picture if you do start to close below these levels, of course. If you close below those levels, you can see the massive void in between these high volume profiles, right? That does mean that you have free space over here in terms of support, and you could very, very start to quickly go down towards those low levels. I don't think today's the day that we need to speak about that yet. I think as it currently stands, it's pretty clear. You have your first high. You're looking for the first high low to come on the daily time frame. You have your range low support over there, and we just don't want to see any closing candles underneath where those prior candles were. So you might get one little bit more of a shakeout over there, and as long as it's closing candles above, it's fine. If it's wicks that come into the 50% level of that low that we put in on Monday, the 13th of January, that is also fair game, right? So simply put, just zooming in on the daily time frame, this is what we've seen, right? We have failed at this level once again. This is now enough information to suggest that this is a significant range high, which means eventually when you do break above this level, that is going to be an incredibly strong sign, right? As soon as you break and close any candles above that $106,000 zone, that is going to be a super powerful sign to suggest that the market has now digested this consolidation or short-term correction, right? This is a consolidation. So this is all a bullish consolidation as it currently stands. I wouldn't necessarily call this macro distribution just yet. It's a bit too soon to say that. Unfortunately, we can only confirm that if you start to hold underneath that candle. So therefore, once we finish digesting this move, get back above that zone over there, the market will be ready to start to mark up, right? And just lining up over here, what we have with the Japanese markets coming up, I do want to remind you that if you fast forward through to next week, on the 29th is going to also be very, very significant. I would assume your next big move is surrounded by whatever comes out at that FOMC statement and what the Fed do next, right? That's going to probably be what drives the next major move. So it should be logical and expected that until the end of the month, you're probably just going to continue to chop, right? So bulls will be looking to defend price action with any form of a high-low. Just zooming in, as I showed you with the high volume chart, you can theoretically wick down into this area. That is your wick fill coming in at exactly 91,800. I've measured out the 50% level. We just don't want any closing candles below that. And if you line that up on the 4-hour time frame, well, it's the same thing, really. All that we add on over here is we can just have a look at what the EMAs are doing. Now, remember, the EMAs only hold weighting or significance when you're in a trending move. And we can only say we start a trending move when we start to close again above those range highs, right? So we need to get above those range highs. Nevertheless, it helps for additional evidence to find an area of support where you might put in that next high low. So you would expect that this level should hold. That is your mid-range. So that's why I said level to level. The first level of interest is $99,000 to $100,000. We want that level to hold. If you lose the $99,000 to $100,000 levels, then yes, we look down towards that $90,000 region as the next zone, right? So this is just lining it up on the 4-hour. And even so, if we were to lose this level, I would still expect a short-term bounce that would lead into yet another lower high over here on the 4-hour time frame. And then that would probably finish the job off until the range lows, right? So this is a choppy market. You may as well get used to it. If you are new to trading, the reason you should get used to it is because the reality is that markets spend about 70% of the time at least chopping between two trading ranges with a range high above and a range low below. You're moving sideways most of the time, and you're only spending about 30% of the time in a strong trading move, right? So I think that's pretty clear, at least insights. Now, I wouldn't want to fade the seasonality. Remember, February is historically one of the strongest months. February, I believe, is the third strongest month when it comes to Bitcoin's history. You can see over there on average putting in 15.66%. The strongest months, I think, are October and November with 21 and 46% respectively. But if you look at January, well, it's been very, very similar with on average that 3.8%, right? So you got the 3.8% of there, like you see in January. So as per Ken over here, he says based on the average percentage increase, January is the 8th best month. I think you can rephrase that and you can just say it's one of the worst months, because 8 out of 12, if it's the 8th best on a ranking of 1 to 12, that's not really good, right? Plus minus about 4%, right? August and June historically are the worst performers. August, June, and September. That's part of how we absolutely nailed the bottom on both the stock market, Bitcoin, and of course on the Japanese market, because seasonally it was expected that sometime between June, July, August, you are going to find a major bottom. I don't know if you guys remember, we actually were looking at specifically this chart over here and the seasonal pattern for Bitcoin over the last 10 years. And you're looking for some sort of a major dip into that zone. And if you look over here at the seasonality, well, this shows you round about that February, March, April is where you start to pick up once again. And same thing over here, October, November, December, seasonally is a very, very, very strong time, right? So with that being said, February is the third best month. October and November are better performers than February, which means I wouldn't want to be going short into the third best seasonal month for Bitcoin, and especially not against when you're pairing up what Ethereum is doing, right? Ethereum is usually even better in those months. Now, I know that the narrative is that Ethereum is dead, right? And definitely feels like it. And we've spoken about this a lot. All you need to do is wait for the ETH-BTC ratio to break structure, create a higher high for the first time. That will be your first sign of a trend reversal. I don't think ETH is a trade that you want to try get into early, but rather it's a trade that you want to get into when there's actual confirmation of a trend reversal. And we've spoken about the higher beta plays multiple times on ETH, right? So why will there most likely be an altcoin season, just like we've seen every single other time in the past? Well, I think this is a good chart that just kind of overlays everything one above each other: Bitcoin dominance, and the total altcoin market cap as per Crypto Amsterdam over here. Essentially, what you tend to see is you see Bitcoin chopping after creating new all-time highs, right? We've seen this multiple times before. Bitcoin just gets to all-time highs, chops about, moving sideways between a trading range. And most people know it. The upside gains for Bitcoin then become limited. What happens next is Bitcoin dominance peaks, right? That's what we've seen before. Bitcoin dominance peaks over there. And then eventually it leads into a big drop over there with the altcoin market cap still below highs, right? Sentiment hits lows. I think the sentiment is pretty low right now. It feels that way, at least from what I can gauge in the comments. And then soon after that, once all hope is lost, sentiment has dropped off, altcoins are dead, ETH died, they're never coming back. Everyone wishes that they were rather a Bitcoin maxi. Boom. That's where the full trade starts to take place, right? Everyone says no alt season, right? You can see just like each of those prior times, no alt season. And lo and behold, what happens next? You get the radical drop in the Bitcoin dominance, and that leads to the breakout in the altcoin market cap. So if we look at the Gaussian channel, which is a trend trading indicator over here, simply put, I just wanted to mark off from the point in time when the Gaussian channel turned green and how long the entire rally lasted, right? Well, it lasted for about 728 days. If you look at the next time when it turned green to the point where it topped, that was about 819 days, right? Well, if you look at that in comparison to this cycle, you would therefore expect that on the shorter end side, you'd be looking at a top sometime towards the end of September. We've spoken about October, November, and how every cycle that is where you typically get the tops. But I think what's more important, which I want to mention over here, is that if you do look at the Gaussian channel, right, it's usually very, very slow for the first half. So the point that it turns green, it's slow, right? Probably getting outperformed by Bitcoin in the first half. But then if you look at the second half, that's where you start to get this rapid price appreciation. And this is all in agreement with everything that you would see specifically in these charts, right? So if you're looking over here at the other chart, which is essentially your altcoin index, if you will, nothing's changed, right? Big cup and handle formation, continued chop within this area, creating a lot of indecision and dropping the sentiment off a cliff, right? We've spoken about the volume and the importance of maintaining that volume, and so far, so good, right? We have been keeping the volume up, which is a good sign. If this were downtrending once again, I'd start to get really, really worried. So this is one thing that you can keep at least a little bit of the hope alive in terms of what could come next. Similar to what we've seen on the DXY, which is this one over here, right? This big upsloping trend line, which has now officially got the break. You can see how similarly these play out and trade against one another, right? Bitcoin dominance, very, very long-term uptrend over there, started to break down over there, and we're still just waiting for the final hammer to come to roll this thing over. So as it currently stands, yes, you're above the mid-range if we focus on this as a primary trading range with the low, the high, and the mid-range over here. Yes, we're above the mid-range, but if you consider the higher time frame, more significant levels, which would be this level over here, well, you failed that level and you're coming back for another test. So it could be a mere couple of weeks away. And if you focus on the seasonality, well, if February is one of the best months for Bitcoin, and especially so for ETH, let's turn this over to ETH over here. You can see ETH in January historically puts in around 20%, February 17%, and March 22%. Now the month is not over, right? Currently we're down 4.27% on ETH for this particular month, but the month is not over. We witnessed something very, very similar on ETH in the prior months, where we saw a big catch-up, right? If you look over there in November, I think November, ETH was also down, struggling, and suddenly it came back with a vengeance, putting in 47% gains over there. So as we wait for the drop in the Bitcoin dominance, we're also going to wait for this to drop down. This is also similar to Bitcoin. It looks similar to Bitcoin's range as well. Bitcoin cap between a range high and a range low. And you also have the USDT dominance chopping about. So the aim of the game over here is to wait for confirmation below before you get too excited. Otherwise, every time it hits the support, it is getting a little bit of a bounce. That small bit of a bounce always creates a little bit of a sell-off. And we just want to see lower highs, right? We want to just see that consistently rolling over. As it continues to put in those lower highs, the more times it grinds into this lower region, the higher the probability is of the USDT dominance breaking down, which will create a flood of new money coming into crypto, right? So remain patient. And if you look at a bunch of charts over here, these are some coins from real world assets to gaming sectors. You got Altura over here coming after a big pump, straight back down into the range lows. You can see that wick has not yet been filled, right? Which means you could possibly see a drop down to about 0.08, so around that 8 cents region. But the key point over here is if it reclaims the yearly open after that, that is a very, very strong bullish signal. And then I would possibly be a buyer of Altura over here, looking for massive expansion towards the upside, right? Other coins to look at, Polytrade. You also have Polytrade over here doing something very, very similar. Straight back down to the range lows following a big pump that occurred 2 days ago. Now having a fair value gap directly into that range low zone with the yearly open just slightly a tinge above. If you do tag that fair value gap, that becomes the buy zone, reclaim the yearly open, and then you can start to run this back towards the top side. So my point is the time to get bearish is at the top of the range highs, right? The time to get bearish is not at the range low support. So if you look at Myria as well, also one of the gaming tokens out there, you can see range lows coming directly into that zone, reclaim the yearly open over there. That triggers the long trade, and then you can start to trade this back to all the way to the top side of the trading range. All right, Solana is still chopping about following a big move over there. We can have a look at some of these other altcoins. Let's see how ETH is doing. Here's your ETH trade. There it is. Remember, don't lose sight of the broader picture over here. You still do have a left shoulder, a head, and a right shoulder. And we have a big wick over here that has not yet been filled. And this is what I'm talking about, right? Go through to any chart that you're looking at and measure out where 50% of that wick is. You can see it lines up directly with the white line that we previously had drawn, which means possibly a move back down into about $3,000 over there. So that will capture some of the liquidity. And I would expect that it would be relatively quick, right? Something like that, capture the liquidity. And then at the end of the day, you still just need to break structure to show some signs of reversal. The importance of ETH is not because we're trying to make bank on ETH. The importance of ETH is we know that if ETH does move up over here and does actually break out of this inverse head and shoulders formation, then technically that would drive the altcoin sector, and we would expect all the puzzle pieces to fall back together again, right? So those are the things that I'm looking at over there. Let me know in the comments which other coins you do want charted. While I wait for you to type in your chart requests over there today, please do remember as well that we are taking signups for Whale School, right? So you have 6 days left to join. There's a link in the description below. Go through over here, click on Whale School. Make sure that you jump in. I think we're now sitting at about 97% full, which means, there's just enough space for about 3% more of you guys to jump in and join, right? So 6 days, 4 hours left to join. Sign up, use the link in the description below. I teach absolutely everything that I know in this course, and we do live workshops, right? So I'll help you through live market relevant trades and what's going on in the market currently. Okay, let's go into some of your requests. Okay, we have Hype. Hype is one. Let's see. So Hype probably going to present a little bit of a second opportunity over here. It failed the close, right? This is the significance of waiting for those confirmations. So let's just clean this up a little bit over there. I said, you need to see a candle close, which it failed, above 25. You have not got that candle close yet. It may just be a shakeout to run it one more time and attempt again a second time. The level remains the same, right? Nothing changes over here on Hype. You need to see Hype closing above $25. If Hype can close above $25, that creates a confirmation candle, which could get this one going up higher, right? So you can see when it goes risk on how quickly this coin starts to move. I do think that it's a decent opportunity, right? If you focus on some of the low time frames over here, like the 4 hour, and you're trying to time a bit of a trend reversal, then remember what you're looking at over here, right? You're looking at a move off the lows into a higher high. Remember, you just broke above that level over there. That's your higher high. And therefore, anything that closes higher than these levels over here would be your higher low. And then you can look, the first high low is always the most dangerous to buy. So you could wait for that high low to print, wait for another smash all the way up to the next higher high, and then close candles above $25. And then theoretically, you could probably end up buying back somewhere around this region over here before the trend does reverse. That is on Hyperliquid specifically. So that is Hype for you. What else have we got? Let me know in the comments. Filecoin. We can have a look at Filecoin. I haven't looked at Filecoin for a really long time. I know that this one just never gained traction, never gained any momentum. So there it is. Filecoin down 1% today, caught right at the yearly open. Super similar to 𝗬𝗢𝗕𝗓 in terms of the file storage narrative, where structurally it even looks similar, where you had like kind of this falling wedge over here, broke out, ran all the way up, and then just gave up a lot of those gains, right? So it is at major support though right now. This is major support. You can see in terms of an SR flip from pretty much all the way back over here. This has been a very, very significant level, right? Resistance, flips it into support. So maybe one or two little scam wicks that are going to run it below, but reclaim, and that will be looking good, right? Okay. Also, what you can do is you can simply just wait for the Fed to implement some form of quantitative easing, for the Fed to start to buy back assets. We're still waiting for that. We've seen a slight change in the curvature of their balance sheet, and we expect that this usually happens around that FOMC, so possibly as soon as the end of this month. The unfortunate truth is, if it doesn't happen the end of this month, you can kick the can down the road until the next meeting, which is going to be in March. Okay, I believe Rune is getting absolutely smashed over here today. I think it was the double digits down. So let's see what Rune's looking like. Okay, maybe it's just a reading wrong there on the bubbles, because it doesn't look that. It's only 2% down. Or was it a different coin that we're looking at? Okay, into support, right? Directly into support. This is your major support for Rune. This is your SR flip region. Yes, you can come a little bit lower, but generally speaking, in the coming days, timing-wise, you want to see this level hold, right? You want to see some sort of a reversal over there. All right. How's XRP doing? We can go to XRP. So slowly rolling over. Still, I think it's going to do what the rest of the market does. If Bitcoin drops down to, say, $90,000, at that point, XRP comes down to 280. If Bitcoin defends the current levels, places a high, puts in a high low over here, then I would expect expansion, right? Okay, NEAR. Let's go to NEAR. How's NEAR doing? We haven't looked at NEAR for quite some time. Near. Where are you? Okay, let's just search for it over here. Near USDT. All right. So there's near attempting to hold the yearly open. So the good news is that a lot of the coins are still attempting to get above the yearly open. If you lose this yearly open, you'll probably get another opportunity down at $3.80, right? And then full confirmation of the reversals back, reclaiming the yearly open again a second time. Okay, Brett, let's have a look at Brett. Is it on this chart or my other one? Let's just see over here. Brett. Okay, there it is. Brett, right in the SR flip region, right? So spending a bit more time for my liking underneath the lower part of the parallel channel over here. You want to see some sort of a deviation and reclaim very, very soon. You don't want to spend too much time here. You want to see this reclaim as soon as possible. That is on Brett. Also, you could just wait for the reversal of the trend, right? We spoke about this previously where I said wait for the reclaim of the yearly open. So as you can see, the real breakup structure is only above 13.25. But you can say with high confidence, if you get above the yearly open, you're probably going to take that level out anyway. All right, cool. Aptos, let's have a look at Aptos. Aptos. Where's Aptos? Here it is. Okay, also below the yearly open. There it is, below the yearly open, marking down. This one's choppy. This one's just range bound. Main trading range is between $7.76. That's going to basically be your range low. So watch for wicks down into 776 as a range low. Confirmation of the trend reversal would be getting above the yearly open. That will take out some of those lower highs. All right, AI16Z. Let's see. AI16Z was pumping yesterday. So the question is, did it, let's just put that in correctly. Did it hold up any of those gains or give everything up? Okay, gave it up pretty much. So it looks like yesterday's big pump towards the upside immediately failed straight back down. Bit of a warning sign, definitely a bit of a warning sign personally, in my opinion, because if it fails this SR flip region, expect a move down to 57 cents as your next major support, which doesn't look like a lot, but that is 40%. There's high volatility on these. You have to be careful. All right, cool, guys. What else? We have virtuals. There's a request on virtuals. Okay, virtuals. Oh, no, I lost it. There we go. Let's grab it. So virtuals, similar to AI16Z, coming directly into support. You must hold this as a high-low in order to print out a W formation. If you don't hold this as a high-low, I have to look down to the next major support, which is going to be similar to AI16Z, probably percentage-wise, 40%, right? Then you're coming all the way down to about 152. Okay, 152 over there. All right. Also, guys, if you do want to expand your knowledge in terms of trading and learning more about the markets, and jump into Whale Room. So we're obviously dropping a whole lot of trades in here. These are some of the traders' profits from the last couple of days. There is additional information in there. Remember, there's educational videos where you can familiarize yourself with pretty much everything that you need, how to do leverage trading on exchanges, different trading strategies. Everything is listed over here. Plus, we also have the Whale Trades blogs where we're writing about various different topics, right? Recently, we just did a series over here specifically on TradingView and unlocking secrets on how to use TradingView. So if you want access to that, there's also a link below. That one's free. To get access to the blogs are completely free. Go through to the newsletter over there. It says Whale Crypto Trades. It's listed below. Click on that link, sign up, and then you should get access to all that information, right? All right, Goku. Yes, Goku hit all-time highs yesterday. We can have a look at Goku. Let me just quickly find that chart. How's Trump doing as well? So Trump still hanging around those lows over there, the range lows. We can quickly go. Melania has been smashed, right? Look at Melania, under $1 billion now, right? This thing launched, what was it? Something like also like 5-6 billion. Now under $1 billion. So Melania, not so good, right? 79% down. This one's been hammered. Let's have a look at Goku quickly. How's it doing today? Up 9.4%, right? Amazing, defying all odds over here, right? Still waiting for the level to reclaim. This is the 4-hour time frame. Let's go into the daily over here. But very, 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 very strong, right? Very, very, very strong project. So it's just a matter of time before. This is coiling up, putting pressure into the resistance level overhead. And when you put pressure into resistance level overhead, you usually get explosive moves, right? So I think definitely the cream will rise to the top, as it always does, right? Which when the rest of the market turns and you actually start to play out these types of things with the February seasonality, and of course the drop in the Bitcoin dominance and the rise in the altcoin market cap, it's going to be the coins that have held up and done very, very well now that end up doing the absolute best. So that's it from me, folks. Let's leave it at that. It's already been 35 minutes. You can keep a shorter show today. I'll catch all of you on tomorrow's show. I hope you all have a lovely, lovely day, and let's see what Japan do. I'll see you all tomorrow, and cheers for now.